The PSU bank basket stole the market's thunder on Monday as the sector dazzled amid meager gains elsewhere. The Nifty PSU Bank Index surged over 5% intraday, even as the benchmark Sensex and Nifty 50 indices gyrated between gains and losses. The gains were propelled by Bank of Baroda, Canara Bank and State Bank of India, whose recent Q2 performance has pleasantly surprised many. Consider this. Bank of Baroda's net profit of 3,313 crore rupees beat consensus by 28%. It reported net interest margin expansion of 31 BP quarter-on-quarter, better than expectations. Loans grew 21% year-on-year as against expectation of below 20% growth. Similarly, SBI's Q2 FY23 profit of 13,265 crore rupees, up 74% year-on-year, was ahead of estimates. The outperformance was driven by core earnings led by better than expected net interest margin, loan growth and low credit cost. NIM expansion of 30 BP quarter-on-quarter after two disappointing quarters was among the highest in the sector. ROA topped 1%, the highest in about a decade. All of this underscores the ongoing bullish story in the banking space, analysts said.
An important takeaway from the Q2 banking results is the significant and in most cases better than expected profitability of the sector. This spurt in profitability is due to the rising credit demand, improving asset quality, and rising margins. A clear positive is that the credit growth is coming from across sectors: corporate, MSMEs, and retail. Since India's growth recovery continues to be strong, this healthy trend in banking is likely to continue in the coming quarters too. The results of PSU bank majors like SBI and Bank of Baroda are more impressive.
Analysts believe Indian PSBs are now better placed with asset quality gradually healing and relatively better balance sheets. According to Motilal Oswal Financial Services, the earnings outlook for PSBs continues to look good, led by an improvement across margins, operating profitability and credit costs. The SMA pool remains benign, which coupled with limited slippages would aid in sustained or continuous reduction in credit costs. On the bourses, the Nifty PSU Bank Index has outshone the benchmark Nifty 50 Index so far this year. The gauge for the state-owned banks has surged nearly 40% so far in 2022, as against 4.4% rise in the Nifty 50 Index. The Nifty Private Bank Index, meanwhile, has rallied 17% during the period. Among individual stocks, Indian Bank, Canara Bank, Bank of Baroda, Bank of India, and SBI have leaped in the range of 29 to 76%. So, is it time to ride the turning tide for PSBs, or have investors missed the bus?
The PSU bank stocks are even now under-owned, and there is value in this segment even after the recent run-up in the prices. The valuation gap between private banks and the PSU banks is likely to narrow going forward.
Domestic markets will remain closed today on account of Guru Nanak Jayanti holiday. Globally, investors will eye outcome of the US midterm poll.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.